Hello and welcome to The Print. I'm Udit Bhupna. As the war in the Gulf escalates, a small sea passage known by the name of Strait of Hormuz has become a key strategic choke point for global energy flows. To discuss more on this, I'm joined by Navin Thakur, Director at Drewry Maritime Research, a global independent maritime consultancy firm. Welcome to The Print, sir.
Thank you, Adit.
So, sir, I want to start by asking that what role does Strait of Hormuz plays in the global energy force with regards to the gas supplies and the crude oil supplies?
So, as many of us are already aware that Persian Gulf accounts for almost 20% of the global energy supplies, both in terms of crude products, LNG. So, mainly originating from Saudi Arabia, Kuwait, Qatar, UAE. So, all of these energy cargoes, they pass through a small 32-kilometer wide passage, which is controlled by Iran. So, and this is not the first time that you know we are hearing this geographical interest point, Strait of Hormuz. Few months back, there was this minor skirmish. At that point, also, Strait of Hormuz was the center of attraction. Now, why it becomes important in the shipping route? Because effectively, any disruption at this juncture means that it directly or indirectly affects 20% of the global energy supplies. That's massive from any context. So that is why it becomes very, very important.
So, basis your analysis, what do you see the current status of crude oil flows in the Strait of Hormuz? Is it completely blocked, or there are still some flows that is going on?
No, so as we stand today, the Strait of Hormuz is completely blocked. It's not just blocked, we have had news of tankers, oil tankers, at least three confirmed strikes on oil tankers. Unconfirmed reports say there has been a casualty as well. So Iran is pretty serious about this closure. In the past, they have threatened to close the Strait of Hormuz, but never in the history of mankind, Strait of Hormuz has been it has been blocked for more than 8 to 10 hours,
Yeah.
uh, and it hasn't been a war zone in the past. But now, Strait of Hormuz is not just blocked; it's an active war zone.
Yeah. So we are already on the fourth day of the escalation of the war. Now, many analysis say that up till 1 week, the things could normalize or so forth. But if this war escalates beyond a week or 10 days, what could be the implications or consequences in the global energy market?
See, it's very difficult to say when the war will end because it's
Yeah.
not, we are not the decision makers. The decision makers who are making this decision are different people, and it's only them who are going to decide when the war will end. But what we can assess is what will be the impact if this war prolongs. Even Russia-Ukraine war, when it started, everybody said that it will be done and dusted in a couple of weeks' time, at max a month. But it has already been 4 years and no signs of any truce. So that's the thing with war. You never know what is going to happen. But in this case, it has become very, very interesting. All eyes are on the Strait of Hormuz. If the war doesn't stop, and more importantly, if the Strait of Hormuz remains closed, we can kiss 20% of the energy supply goodbye temporarily. Now, this is massive. 20% is crude oil trade. Crude oil trade is about 63 million barrels per day, and about 15 million barrels per day originates from Persian Gulf. So that supply is cut off, completely cut off.
Yeah.
Now, this is the energy supply side of the equation. Now, most of these Middle Eastern countries which are engaged in this war and are affected because of the blockade of the Strait of Hormuz massively depend on imports to run their day-to-day life. They are not greatest producers of food grains.
Yeah,
They are not, you know, great manufacturers. So for most of their needs, they are dependent on imported stuff, and that, so nothing is going in either. So
yeah,
it is a double whammy. Now, I think decision makers in Iran must have done some calculations, because Iran massively depends on their oil revenue
yeah.
for to run their economy. So Strait of Hormuz blockade means they are also not earning money right now. Now, these are supply side disruptions, and the buyers who are dependent on this 20% supply, mainly India, China, Japan, Korea, they will look elsewhere. Now, where is elsewhere? Elsewhere is Africa, West Africa. Elsewhere is Latin America. Elsewhere is US. Elsewhere is Canada. But the thing is that it's easy to shut off supply, but it's not as easy to replace 20% supply
Yeah.
in a short span of time. So there will be struggle for buyers if the war prolongs. But obviously, we have seen it with Russia-Ukraine war, that economies are resilient. They do find ways to uh, find alternate supplies.
So yeah, exactly. So uh, means whatever the oil that maximum of the oil that flows through the Strait of Hormuz goes eastwards to countries like India, China, Japan, South Korea. So given that one of if this supply shuts down, so the option remains say within the Atlantic basin or somewhere around Africa. But isn't that will increase the voyage times as well as the freight cost as well?
Yes, absolutely. But it's not as black and white as it seems from the outside,
Yeah,
because what you haven't factored in is for some commodities, you know, uh, like crude oil, these vessels are in short supply, and we have already seen that even before the blockade, the freight rates for VLCC tankers were astronomically high. On the other hand, freight rates for LNG tankers were not so great. There are plenty of LNG vessels which are available, uh, and it's not just the availability of the vessels, the quantity of the vessels available to ship these cargoes from far-flung areas, but also the quality of the assets. Now, LNG tankers are struggling with the quality of assets because they're steam turbine vessels, which is roughly about 200 vessels in the fleet.
yeah,
Uh, they are virtually, uh, gas guzzlers. They produce a lot of emissions, and in a normal day-to-day operation, they are not considered fit to sail, not per se because of any technical deficiency, but because
yeah,
of the kind of emissions that they release. So for LNG, despite all of this, there will be, they will gain some strength because of sourcing from far-flung areas, which will aid ton-mile demand. Uh, but there are just too many LNG carriers at this point to help the freight rates massively. On the other hand, for tankers, there are a couple of scenarios that one must look at. You talked about crude oil moving out of Persian Gulf to east, but a significant chunk of uh, diesel supplies to Europe also move out from this same region. There is Red Sea region where Saudi has got some supplies, refineries, and this pipeline which can supply 3 million barrels per day. But now with Houthis also joining in this, geopolitical escalation,
yeah.
we are of the opinion that Suez Canal traffic will also remain affected, and essentially, Cape of Good Hope will remain the preferred route in the short term. Now, I'm sure if insurance is your area of interest or not, but there is this angle of insurance cover, also war risk insurance cover, that will affect the deployment of vessels in this region.
Yeah.
So overall, in the short term, we expect the freight rates should go up for both LNG
Yeah.
and tankers. But from medium to long term, I think it will be largely dependent on the fundamentals of the market, which even today is not in favor of LNG shipping, but yeah,
Yeah.
slightly tilted in favor of tanker shipping. So tanker shipping is expected to do better because of this blockade if it persists for long. But
Yeah.
LNG shipping, after a short spike, I think it will return back to normalcy.
So, sir, is there any alternate pipeline that the Middle East or the Gulf region operates, which can be used as a maybe short-term buffer, like maybe alternative shipping routes or pipeline that could be used maybe going eastwards or towards Europe?
There is only one pipeline, that is crude pipeline, not any refinery pipeline. So uh, that passes through Saudi Arabia, that can handle about 3 million barrels per day of crude. But the interesting part is that Saudi Arabia, they have a refinery of their own in the Red Sea, and they use almost 1.5 million barrels per day of crude oil from that pipeline. So effectively, that leaves only about 1.5 million barrels of crude oil to be shipped elsewhere. There is a hypothetical scenario that if you know uh, crude prices go up so high that
Yeah.
it becomes profitable to sell crude rather than refine it, they might ramp it up to 3 million barrels per day, but not beyond that. For LNG, there are no pipelines. Everything is in Persian Gulf. Only Oman has some capacity that it is shipping anyway. Even today, that's not closed.
So, sir, like today is the fourth day for the escalation. So, how do you see the global oil and gas prices have reacted till now? And, what will we see going forward with regards to the pricing?
It's very difficult to say or put a number on the price, because all we can say at this point is prices in the short are going to escalate, and we have already seen
Yeah.
Brent crude first day closed 13% higher. Even today, it's high as compared to yesterday. So until this blockade remains, unless there are any political solutions to the current crisis,
Yeah.
and more importantly, as long as the Strait of Hormuz remains closed, uh, the prices will show the impact. It will continue to rise, and we have seen that. But there will be a plateau after this supply situation is rebalanced. Now, one thing is, since you talked about pricing, we all know it's a game of supply and demand of
Yeah.
commodities. Now, prior to this escalation, OPEC was considering ramping up production. So
Yeah.
OPEC has the capacity to debottleneck its production. Russia can pump in more oil in the market. There is Venezuela, there is Latin America, there is US. Shale oil production might take off if the prices become, congenial for more investment. So all in all, I think in about 2 to 3 months, typically, uh, more supply could be added to the market, but definitely not 15 million barrels that has been snapped off. So in my opinion, the base will be reset as long as Strait of Hormuz is closed. But the pricing will plateau at some point. Now, whether it's $100, $150, or 200 or $300, nobody knows at this point.
So, like Strait of Hormuz is a passage which can be blocked and opened. But the news are also there that the some of the refineries of Aramco, like Ras Tanura, and also the Qatar LNG, the Ras Lafan, has been attacked. Now, even if the Strait of Hormuz, say, supposedly opens, do you think that these refineries would still be closed because they need to do like repair work or so before opening up?
Absolutely, absolutely. I mean, all the damages will have to be assessed, and a timeline. These depending on what kind of damage they have, uh, you know, experienced, and based on the damage estimation, they will come out with an opening date that when they can go full fledged. But I think these are massive refineries, so even if a part of the refinery is damaged in Ras Tanura or Ras Laffan LNG terminal. They have multiple trains. I'm sure not all trains are damaged, so they can
Yeah.
cordon off the area which has been damaged and continue production, albeit at a slower rate, and supply energy to the world.
So now coming to India, like crude, India is dependent on crude imports around 85 to 90%. But India is also dependent on the gas supply, especially like LPG gases from this region. So how do you see India's alternatives are in the short term, and say if the war escalates beyond uh, a week or so, what are the options then?
So, for India, I think the options are US. US is now that they have signed this trade deal with the US. US will also pressurize India to buy energy supplies from them since it's unavailable in the Middle East.
Hmm.
And West Africa is another option. Brazil, Guyana, Venezuela. These are the options that India can look to replace the existing supply. I think more than the diversification of supplies, India is a very very price sensitive market.
Yeah.
So I think that is where India's problems will lie. That whether they want to import massive amounts of cargo at that price. With crude oil, they don't have an option. But with natural gas supplies, they do have an option. We can see economies like India and China very swiftly switching to coal, especially for power generation. We don't use a lot of gas in power generation, but for fertilizers, for example, LNG used as a feed gas in fertilizers, we can switch back to naphtha. But if supply chain is affected, there is trickle effect on pricing on every product. So not that one option would be massively better than the other, but
Mhm.
they will assess the situation as things unfold and will choose the right option. But there are plenty of supply options. The only caveat is that everyone wants to take advantage of geopolitical crisis. So no matter where they source it from, the prices will be massively different from the pre-Middle East escalation era.
So, in the past few months, India has cut down on Russian imports oil and increased that oil from the Middle Eastern region. So, there, one of the options is that the Russian cargoes are available floating at the sea. Would you see that India could pivot back maybe for a short term to those oils and buy those oil?
See, that's a difficult question because this is something which they would be tempted to do, but they would be wary of the US sanctions because at this point, when Middle East supplies are unavailable, you don't want to cordon off US as a supplier for your energy because especially to replace LNG supplies, US is the most probable market at this point because they are the only country with excess supply, because Qatar, which accounts for almost 20-23% of the global supply, is already out of action. Now the thing is that it's not just India who will be hunting for this replacement supplies. The entire Europe, Asia, China, Japan, Korea, they all which massively depend on Qatar for their LNG supplies will be hunting for alternatives. Same for the crude. China, effectively. You know, China used to import massively from Iran. Now they are the one who are the most affected. So they also have to look elsewhere if Iranian crude is not available. So they will also turn towards Latin America or US or West Africa. So it's like now a race, who can get a better deal, who can get a better contract. But at this point it will be sellers market, not the buyers market. So sellers will set the price, buyers will have to pay whatever they ask for if they really want
Yeah.
that's to secure that supply. So India might be tempted. They will weigh their risks, what the risks are. It's not that India has completely shut off imports from Russia. Even today
Yeah.
they have scaled it down, but knowing from the past, I think they would be tempted to take this risk and escalate imports from Russia. So that's, we cannot completely rule that out.
Agreed. And so do you think that India would use its strategic petroleum reserves? Means, and how long will that strategic petroleum reserves last in case the war prolongs?
So strategic petroleum reserves are something which are kept for days like this. Now, it depends what is the resilience of Indian economy to absorb the price shock. If the if I'm sure our foreign ministry and petroleum ministry is monitoring the situation. If things get out of hand in terms of pricing, they'll start drawing on the strategic petroleum reserves, assuming almost only about 40% of the supplies will be available from outside at previous contracted prices. The remaining 60% will have to be procured again at the market rates, which will be significantly higher than the previously contracted prices. Even the previously contracted prices, which are index linked most of the cases, will go up. So it will depend on the assessment of our petroleum importing companies, national oil companies, that how do they see the situation, at to what extent they want to uh, draw from their strategic reserves. Unlike China, we don't have 90 days of petroleum reserves. I think in most of the countries, they have about 15 to 30 days of strategic reserves. We probably are sitting somewhere close to 36 to 45, depending on at what time of the year we are talking about.
Yeah.
So, but we are definitely going to see short-term withdrawal of strategic petroleum reserves, uh, just to manage the domestic prices. And if it prolongs, I'm sure Exchequer will take this decision to start importing at the market rates, and then we'll also see adjustment in the petrol, diesel, and other petroleum products prices.
So as you mentioned, domestic prices, so I think many viewers will be keen to know or understand that do we see that the retail petrol or diesel prices going up in the next month or so?
See, I'll. Uh, this is a question which is not for me to answer. This is the government of India will take this decision to how they want to play it.
Yeah.
But I can talk about the economics of it. That how does it work? Currently, the retail prices of petrol, diesel, ATF, etc., uh, they have massive taxes on it. So one option for the government is to absorb some of this price shock by reducing the taxes and leave the prices intact where they are. I think they have got massive buffer. The government has got huge buffer on taxes, and
Okay.
they can easily play with this margin. The other option is that government bites the bullet and says that let's pass on all the cost to the consumers, because this is not something that is going to go anywhere in the near future. And then we can see some price rise, but I cannot put a number on the quantum of the price rise.
Very well, sir. I think finally to close, I think the situation is evolving. So let's see where we are from 1 week from now, and hopefully if the things normalize, Strait of Hormuz opens. Thank you for joining us and speaking to us, sir. And thank you for your time.
Thanks for the pleasure.